Hey, good afternoon, everybody. Hope you're doing well. Hope you're having an enjoyable weekend. I wanted to put out a quick video this weekend to go through some of my favorite charts um, that I like coming into the next week. So I use the quiet time away from the markets on the weekends to look through hundreds, if not thousands, of charts, and then I take my favorites and I put them into a separate watch list, a more focused watch list, and then those are the ones that I really watch more closely during the trading week, and that's where the majority of my trades come from. So the weekend's a good time to do a lot of homework. I could always add things to that list during the week, but like I said, most trades that I make come from the work that I do on the weekend. So these are some that I like this weekend. First one is MON Monsanto. Really nice chart here, in my opinion. This 122, 123 level was resistance and resistance. Broke above it in late February and has just been kind of consolidating back into that level. And Friday put in a candle. Looks like it wants to start pulling away from that level. So if that happens this week, this is definitely one I'd want to be buying. Really pretty chart. So you have your risk defined if you want to put your stop under the yellow. I usually give them a little bit more room than that, but the target of this pattern that it broke out of, it's a cup and handle type pattern, would be around $130. So really nice looking chart. Next one is one I actually own. I bought this last Thursday, but I still think the risk reward is pretty favorable. I bought it as it broke above this level here, and then it had a nice day Friday. But what's really, I'll zoom in a bit so you could see it. So that's the, above 19-ish is a good level to own this, in my opinion. But it's breaking out of a kind of a longer term triangle pattern. So next week, we'll see if it can get some more momentum to the upside as it breaks out of that. Here's the weekly chart. You can kind of see it better. I think maybe it can make a run at those old highs, so that would be quite a ways up there. But we'll keep an eye on it. I like what I see. It's there's little consolidation level here. This 1922 level. It's just above that, so we definitely want to see that level hold. But I do like this chart quite a bit. This is another one I own. This is a solid company, big growth numbers. It broke out. It hasn't started really taking off yet. Had a nice day Friday, up 3%, but I think this is one where the risk reward is still quite favorable here. If you put your stop under the yellow, that's 4 or 5% below current prices. This one's in a nice, well-defined long-term uptrend. Another option would be if it comes back to retest this 116-ish, 115 level, that would also make a good buy. But it just depends on your time frame and what you look for in risk reward. But I think buying it right here at this level still presents a favorable risk reward. So this is another one I bought Friday, right before close, but it's kind of a cup and handle type pattern here. 157, $158 was resistance. Took a nice shallow dip. That's like the right shoulder inverse head and shoulders cup and handle. It's the same idea. It came all the way down, to the 135 level, hit that resistance point, but the man started to pick up a little sooner, which is often a sign that it's going to break that level. Not always, nothing's guaranteed, but in any case, I really like this chart above this, 158 level. So we'll see what next week brings, but if it stays around this area, I think it makes a nice risk reward on the buy side. This one, HCLP, another high growth name. There's this key level here around $12, $13. Um, this is it was resistance here, kind of broke above it. Then it's resistance, and then it's kind of just moving above it. So I want to kind of watch to see what happens here. But if it looks like it's going to start taking off, I think this one might have some room to the upside. So that's another one I'll be watching this week. Under Armour, I've kept my eye on this one. I haven't pulled the trigger yet. It doesn't just hasn't quite got going, but there's this big level here, 1625, 1630. There's been a lot of shares traded in this area. Going back to last fall, it was resistance here. It's been acting as support there since they released their earnings. So I really like it above that level. It's also above the 200-day right now, just barely. So if it looks like it might start moving up, maybe if it can move up around 1775, start getting some momentum, this is one I might want to jump on because longer term, if this is reversing the trend, which it looks like it is, it might have quite a bit of room to run. So definitely one that I'll be watching. Semiconductors were really hot last week, so have a couple names there that I like that haven't run away too far yet. Here's one of them, TRT. This area around 575 is a big area here. It was resistance back. This is June of 17. You know, it was last fall was resistance, had that big gap up, came back to retest, fill the gap, and it's holding just above those levels now. So if this one starts moving up, you know, maybe it can get above the 50-day or above this, you know, 620, 625 area. This is one that I would like to jump on. If it comes back just to retest those old highs from last fall, that's 30% up there. I think that'd be a reasonable price target for this. So good looking chart here. And the best part about it is, you know, it's right above that key 575 price area and right above the 200-day. So if you wanted to buy it here, you know where your stop's going to be. It could be right down there, so you know what you're going to lose before you get in, and that's really the key to any trade that I look at. Is I first look at where's my stop going to be. So you have that here, and we'll see if we can get some upside momentum. But I do like this name. Here's another semiconductor name. This has a big level here, about 2850. That was resistance recently here and here. So we'll see what next week brings, but I think this is one too. You know, it's just above the 200-day. If you put your stop, you know, down here, 6-7% below current price, we might get a run at a minimum back to those old highs, which is, you know, 10-11% up there. So good looking chart here, one that I'll be watching. Here's a tech company here. This one is LLNW. It's right at a key area there. It's from this gap. This is back from last fall. You can kind of just see there's been a lot of shares traded in this range here. You know, we'll call it $4 to $4.50. And it's right below that. It's kind of just consolidating below that 450 level. So this is one I'd be watching to see. You know, you never know how long it's going to consolidate for, but if it starts moving up above 450 and looking healthy, it's just above the 200-day as well. This might be one I'd want to jump on. For right now, it's just watch mode, but I do like the potential in this chart. This one, SSNC, had a nice breakout there above this $50 level here, and then it's kind of just been consolidating. So I kind of like that when it breaks out and kind of consolidates. And it's nice if you miss the initial breakout. And sometimes when it consolidates like that, if you own it, it can be frustrating because you want it to move up. But if you don't own it, it's kind of nice because you can just watch it. And then if it starts moving up again, if it starts getting up above this 52, 53 level, might be time to jump on, and you can, put your stop not too far below in case it turns against you. So I do like the looks of this chart. So that's another one that I'll be focusing on this week. Here's a healthcare drug manufacturer, COLL. This one had a really nice breakout on Thursday above this key, $26 level. And then Friday kind of dumps right back down to retest that. So we wouldn't be excited if you owned it on Thursday, but then sometimes you get another chance. So Friday, the risk reward is there. You can put your stop under that 25 level. So maybe this one gets going, but it's definitely gonna be one that I'm watching. This is one I bought, and it hasn't done much yet, but I still really like the chart, and I think if it does get moving, it can really get moving quick. This is CVEO. You could see this level here around 23, 70 was resistance going back at the early 2017. It was resistance here early this year. Kind of broke above it, but not definitively. So it's kind of consolidating just above that key level, and I like that look that it has right here. My stop's going to be just under there, 350, 355. But this is one, if I do own it, so I will be watching it. But if I didn't, this looks like a good spot. If it starts moving up from here, it presents a nice risk reward. So those are just a few of the charts I'll be watching this week. If you're interested in ttptrading.com. It's myself and CJ Agresta, and we provide focused watch lists like this, and of course live trade alerts and sector reviews and things like that. So it's $69 a month, and you get access to both myself and CJ. So we're really passionate about it and excited. So if you have any interest, feel free to reach out to us with questions. But I do appreciate your time, and I hope you have a good rest of the weekend. Thank you.